Okay, so this is the continuation still of our module number 7, accounting for materials cost. So we are now in accounting for defective materials. So first, we will discuss about scrap materials. So when we say scrap, this refers to pieces or of fragments of materials or something to be discarded. So examples of this are pieces of cloth from cutting the material into the required shapes and sizes in case of manufacturing t-shirts. Fragments of iron bars resulting from cutting them into desired lengths in the case of a construction company. Although scrap materials cannot be avoided, they should be minimized and should be reported and controlled appropriately. So a scrap report is therefore prepared regularly so that these unusual quantities and value may be noted for adoption of prompt corrective measures. So when the value of scrap is significant and readily determinable, an entry is made upon the transfer to storeroom. Otherwise, an entry is made only upon sales. So regardless of whether the entry is made or not upon transfer of this scrap, it is preferable to maintain a ledger to control the quantity of scrap that is being incurred. So if its value can be reasonably estimated, the corresponding value may also be indicated. So the treatment for scrap can be summarized as follows. Entry is made upon sale only. So the credit may be to factory overhead. This is in the case if not traceable to any specific job or process, or the resulting scrap is not traceable to any specific job or process, so we will credit factory overhead. To income and expense summary as other income or work in process if this is traceable to any specific job or process. And the entry is made upon gathering of scrap. We will debit scrap materials. In this case, credit the factory overhead or work in process. Upon sale, the difference between the assigned value and the selling price will be treated as an adjustment to factory overhead or work in process depending on which account was credited when the scrap was recorded. So we have here an illustration or example. So scrap materials with estimated value of 4,800 are transferred to storeroom. So they are subsequently sold for 5,000. When the entry is made only upon sale, so our entry is to debit scrap sales treated as other income, Meaning in this case, we will only be recording this scrap upon the sale. So the scrap sales will be treated in this case as other income, so we will debit cash, credit to scrap sales. Okay, to close at year end, so we will just close also or make the scrap sales account balance equal to 0. That's why we will debit it, and the credit will go to our income and expense summary account. If the scrap sales are treated, on the other hand, as an adjustment to our factory overhead. This is in the case if this scrap are not traceable to any specific job or process. So the entry will be to debit cash and credit to our factory overhead. We just follow what we have mentioned a while ago about the rules on how to account for scrap. Okay. Letter C, if the sales is treated as an adjustment of production, meaning traceable. These scrap materials are traceable to a specific job or process. So instead of using factory overhead, our credit will be to work in process. Number 2, if the scrap materials are taken up upon gathering them. Okay, so upon gathering them, the entity records the scrap materials. So the entry will be to use scrap materials account. Okay, for 8, credit to factory overhead if that is not traceable, or work in process if that is traceable to any specific job or process. Upon sale, our entry for this is to debit cash, credit scrap materials, and the credit for the corresponding income will be either for factory overhead or work in process depending on what account was used upon gathering. Okay, so when sales of scrap are recurring and significant in amount, they may be accumulated in the scrap sales and subsequently close to our factory overhead or work in process. Okay, so we go now to defective goods. So defective goods are those that have developed imperfections and they are reprocessed so that they can be sold later on as regular finished goods. So correcting these imperfections depends on whether the expected benefit will increase in sales value and exceeds the incremental cost arising from further processing or reprocessing it. So cost of reprocessing defective work may be charged to our factory overhead or work in process. Okay, so the debit to factory overhead when imperfections are normal, meaning we will use factory overhead when these imperfections are normal or expected in standard jobs. And then charging reprocessing cost of factory overhead also has the effect of prorating this cost among all the jobs, which requires the inclusion of specific provision in computing for our factory overhead rate. So the reprocessing cost will be, or on the other hand, if the reprocessing cost will be charged to our work in process or to a particular job when imperfections are due to special or special nature, of the job. So this is the time only when we will charge the reprocessing cost to work in process. But if the reprocessing cost or the defective work was due to a normal or expected standard, then we will use factory overhead. Please take note of that. Okay, so to understand better, we have here an example. So a job order for 30 kitchen cabinets entails the following prime cost. So we have direct materials of 18,000, direct labor of 12,000. Factory overhead rate is 80% of our direct labor. Okay, and then it includes 3% provision for reprocessing cost in the case of defective work. So upon the processing or manufacture, it was found out that 5 cabinets were found to have imperfections and needs reprocessing. So in this case, the prime cost incurred in reprocessing them for those defective work amounts to 2,000, which includes our direct materials of 800 and direct labor of 1,200. So in this case, if the entity uses the reprocessing cost or charges the reprocessing cost to our factory overhead, okay, meaning the job is standard or regular and the imperfections are considered normal. Okay, so the reprocessing cost will be charged to our factory overhead. So the overhead rate again is 80%, okay, of our direct labor cost. So the original cost of the job must therefore be equal to, okay, based on the table. So this is the total manufacturing cost is 39,600. Okay, so factory overhead again, please take note, is 80% of our direct labor. So the entity to record this transaction is to take up the original cost of the job. So we will debit WIP or WIP work in process direct materials of 18, direct labor of 12, and factory overhead of 9,600. So we will just credit materials, direct labor, and applied overhead factory respectively. To take up the reprocessing cost. So in this case, it was mentioned here that prime cost is 2,000, direct materials is 800, and direct labor is 1,2. Factory overhead is 80% of direct labor cost. So therefore, our entry is to debit, since in this case, the defective work is considered normal, so we will charge it to our factory overhead control for defective work. So materials is 800, payroll is 1,2, applied factory overhead, 80% of labor is 960. So the total defective work cost is 2,960, which will be charged to our factory overhead control account. So to take up the completion of all the 30 units, meaning this includes already our defective this is, I think, yes, it's include already the defective work, okay, of 5 units. So this is finished goods is 39,600, credit to work in process because in this case we transferred it already to finished goods 18, direct labor 12,000, and 9,600 of factory overhead. Okay, so if you could notice, it's still the same with us. These are without defective goods. Okay, so it may be noted that the unit cost of 30 units remains at its original figure of 1,320 because in this case, the reprocessing cost was charged to our factory overhead. Again, because the defective work was considered to be normal. Okay, what about if the entity charged our reprocessing cost to a particular job? Meaning, the defective work results from a special or specification of the job. So when defective work is due to a special nature of a job, such as when it requires difficult processing or specifications are very strict. So in this case, the cost of our reprocessing will be charged to the job. And therefore, we will be charging it to our work in process instead. Factory overhead rate should therefore exclude this provision. Okay, because we only use factory overhead for reprocessing if the imperfection is considered normal, but in this case, this is due to the special nature, so work in process will be used. Okay, we have here an example, the same also as the previous example. Okay, this one is 80%, sorry, not 77, I think. Wait. Okay, 77 because later on, okay, we will just go back with the illustration earlier. Okay, for factory overhead, 80% of the direct labor cost. Okay, so 77%, I mean, because we have 3% provision for reprocessing cost of defective work. And in this case, we will exclude this 3% from our factory overhead because in the second illustration, we will charge the reprocessing cost to work in process and not on factory overhead. That's why 80 minus 3% is 77% right here. Okay, so factory overhead is only 77% because we will exclude now the defective work. Okay, so to take up the original cost, actually the same entry as the first entry that we have, we only differ in our factory overhead. Okay, because it's only 77% and not 80% anymore. Okay, to take up the reprocessing cost, so again, the same also, direct materials of 800, direct labor of 1,2, and then 77% of direct labor is our factory overhead. Okay, so we will credit materials, direct labor, and applied factory overhead respectively. To take up the completion of all the 30 units, so in this case, we will have a different balance. Okay. I think, okay, this is not 340. Okay, so in this case, we will be using the entries, okay, that we have for, or the balances, I mean, net of the defective work. Okay. Or I mean, in this case, sorry, if you could notice right here, for example, in work in process, direct materials, okay, for the original cost of the job, we only have 800. Since in this case, the defective work was due to a special nature, and then we will charge it to work in process, that's why we also have here a debit of work in process for direct materials of 800. So we just add the original of 18,000 plus the work in process resulting from reprocessing of 800. That's why it resulted into 18,800. Okay, for the direct labor, the same also, 12,000 for the original plus 1,2 for the reprocessing cost, so that's 13,200. And for our factory overhead, for the original, we have 9,240. Okay, plus our reprocessing cost charged to production of 924. So it resulted into 10,164. Okay. I think the total of this is 42,164. Okay, instead of 300. Finished goods. Okay, we just total these three items. That will be transferred to our finished goods account. Okay, in charging the reprocessing cost to the job, unit cost goes up to 1,405.47. So 42, this is the total amount of work in process transferred to finished goods. divided by 30 units. Okay, so this is an adjustment to our defective there is an adjustment for the defective work. So the defective work adds 97.47, or that's 2,924. Okay, the total of this, okay, divided by 30 units. So instead therefore of having just 1,308, okay, we will have now unit cost of 1,405.47, because again the defective work was charged to a particular job, charged to work in process. Okay, that will be the result if the entity will use this charging of reprocessing cost. Okay, so we will proceed with accounting for spoiled goods in this case. So spoiled goods are those that have developed imperfections and are disposed of as such. So the difference between the selling price and the cost is treated either as a charge, again, the factory overhead for the loss on spoiled goods, or it will be left also with work in process as additional cost of remaining good units in job. So meaning, spoiled goods and defective goods are quite similar, okay, in terms of charging, depending on the choice of the management. So the charge is to factory overhead when spoilage is normal again, okay, or inherent in the manufacturers of standard jobs. So this practice has the effect of charging the cost item to all regular charges, or to all regular jobs as charges to factory overhead, because it will be prorated among all the jobs. Okay. This implies that in computing for factory overhead rate, sufficient provision for spoilage is included already in the estimated amount of our factory overhead. So in making the entry, the cost of spoiled units will be removed from our work in process, and spoiled goods are taken up at their estimated market value, with the loss debited to factory overhead. Okay. However, when the spoilage, on the other hand, is due to special nature of the job, so just like our defective goods, this will be treated as a loss and part of a particular job, and it will be charged to our work in process account. So in making the entry, the cost of spoiled units is removed from work in process, so that whatever loss is incurred from spoilage, it will be left, okay, left with work in process as part of the cost of the remaining good units for the particular job. So to understand better, let us take this example. So we have here the prime cost per unit for 100 beds. Direct materials is 450, direct labor is 300. Factory overhead is 250 per unit. This includes already a 10 provision for normal spoilage. So upon final inspection, there are 2 units which are considered imperfect or spoiled, and this can be later on sold for 600 each. Okay, first treatment, loss from spoilage charged to factory overhead, meaning to say spoilage are considered to be normal. Okay, so the overhead rate in this case is to 50, and it also covers the 10 provision for normal spoilage. Okay, so in this case, for our 100 beds, so here is the computation of our unit cost. For materials, original is 45. Okay, so cost of beds, 2 beds already is 900, because direct materials is 450. Okay, times 2. This is for our spoiled goods. Okay, cost of 98 beds is 44,100. Okay, we just deduct from 45,000 this 900, okay, to get the difference for the cost of 98 beds. Next, for labor, total is 30. So for the cost of 2 beds, so that's 600, so 300 each bed. So we will just deduct it from the original to get the cost of the remaining good units, 29,400. For factory overhead, so this is 25,000, and for cost of 2 beds, so that's 500. So again, we will deduct 500 from 25 to get the cost of 98 beds for factory overhead. So that's 24,500. So the total cost for the original should be 100. For the 2 beds, it's 2,000. And for the cost of 98 beds, that's 1,000. But again, if you could notice, even though there is 2 spoiled units, our unit cost remains at 1,000 for the remaining good units. Because again, the reason for this is that in this case, the spoiled goods is considered to be normal and absorbed by the factory overhead. Okay, so that's why there is no change with regard to the unit cost. Okay, so our entry will be, okay, so we will just debit the work in process direct materials 45, direct labor 30, factory overhead is 25, and credit for materials, direct labor, and applied overhead respectively. To take up the spoiled goods, so this is spoiled goods is 600. Okay, so later on it can be sold for 600 times 2, so that's 1,200. Factory overhead control, okay, so 2,000 minus 100 or 1,200. Okay, so that's 800. Okay, next, for our factory overhead or work in process, we get this from the table earlier. Okay, right here. So credit work in process direct materials 900, direct labor of 600, and factory overhead of 500. Okay. By the way, for factory overhead control, 2,000 is the unit cost. For one bed is 1,000, so times 2, 200, minus the spoiled goods, okay, of 1,200. So therefore, the remaining charge to the factory overhead control will be 800. Next, to take up the completion of our 98 beds, so finished goods, we will transfer 98,000. This also was taken from our table right here in this column. Okay, so 98,000 to finished goods, credit work in process direct materials of 44,100, direct labor 29,400, and factory overhead of 24,500 respectively. So it may be noted that the cost per unit remains at 1,000. So 98,000 divided by 1,000 beds. Okay. So next, on the other hand, if loss of spoilage is charged to a particular job, meaning in this case the spoilage was due to special nature, okay, so or strict specification, so the overhead rate used will be excluded, or will exclude 10% provision for normal spoilage, so that in this case we will have a different unit cost for the remaining good units, because in this case factory overhead do not absorb the spoilage anymore. Okay, so in this case the overhead rate used excludes the 10 provision for normal spoilage, so that the original cost per bed must be 990. Okay, so direct materials of 450, direct labor is 300, and our factory overhead is now 240 only. That's why it's 24. Okay, so in this case we have here the estimated recovery cost per element. So how to determine this estimated cost recovery? We have here the computation. For direct materials, 450 of direct materials per unit divided by 990, which is the unit cost of the original job or process, times 1,200. So this is the cost for the spoilage. Okay, so allocated for direct materials, estimated cost recovery is 545. So for direct labor, we have 300 per unit divided by the unit cost okay, times 1/2 of spoiled goods. So that's 364. And for factory overhead, we have 240 factory overhead per unit divided by unit cost of 990 times the cost of spoiled goods of 1/2. So that's 291. Okay, and then the cost of beds, of course, you will just deduct from the original the estimated recovery, okay, of the spoiled goods. So the rest will be charged to our remaining good units. Okay, so the entries will be, okay, debit to work in process direct materials 45. We will just take this from the table. Direct labor 30, factory overhead 24, and credit to direct materials, direct labor, and applied factory overhead respectively. So to take up the spoiled goods, so if you could notice, we no longer use the factory overhead control because this is charged to work in process now. Okay, and for our finished goods, so we take also this from the table. Okay, so credit the work in process. So with loss from spoilage treated as part of work in process or left with the cost of a particular job, the unit cost of our 98 remaining good units becomes 998, okay, and not 1,000 anymore, because in this case its total cost is 97,800, so divided by 98 units. So this means that the spoilage results in an adjustment of 8 in unit cost. So it is arrived by a loss from spoilage. So 2,000, unit cost of original is 1,000 minus the spoiled goods of 1,2. So that's 800 adjustment divided by good units of 98. So the adjustment in our unit cost is 8 per unit. So we have here the note, okay, again, we will I would just like to reiterate, when loss from spoilage is treated as factory overhead, meaning your factory overhead already includes the provision for normal spoilage. In this case, if the spoilage is considered normal. So the cost of spoiled units are removed from work in process because it is absorbed by our factory overhead. Again, when the loss from spoilage is charged to a particular job, the overhead rate will exclude the provision for normal spoilage, and it is the estimated cost recovery which is removed from the work in process account. Okay, just like for example in this table right here. Okay, from the work in process, we remove this estimated cost recovery to charge it to the remaining good units. So that's what we are talking. Okay, so please take note of that rule. Okay, in addition, if loss from spoilage and reprocessing cost were taken as period cost, meaning loss from spoilage and reprocessing cost when treated as factory overhead or as a cost of particular job, they are both considered as product cost. In both cases, imperfections may be considered normal, okay, for all standard jobs or to extraordinary factors beyond the control of production. So examples are those caused by fortuitous events such as flood or earthquake. So for spoiled goods, the entry upon the recognition of spoiled goods will be, okay, spoiled goods at market value, and then loss from flood, for example. And we will just credit work in process for our direct materials, direct labor, and factory overhead respectively. For defective work, so the reprocessing cost will be taken up as loss from flood, for example. Okay, and then credit to direct materials, direct labor, and factory overhead. So normal loss is treated as product cost, while abnormal loss is treated as period cost. Period cost meaning expense when incurred. Product cost is part of the inventory cost. Okay, treatment for loss from spoilage and reprocessing cost compared. Okay, so this is actually the summary of what we have discussed. Although entries from loss from spoilage and reprocessing cost differ, they may be one set of guidelines in their treatment. Okay, actually, as I have mentioned earlier, it's like the same. Okay, if the imperfection is normal or inherent in the regular manufacturing process, okay, the treatment for reprocessing cost or loss from spoilage will be charged to factory overhead. If the imperfection is normal in particular job or due to the strict specification. So our reprocessing cost or loss from spoilage, will be added to the cost of job or work to the work in process account. And if the imperfection is due to extraordinary causes, in the case of flood, for example, this will be charged to specific loss account. This is the example of extraordinary, causes. So although the above treatment are observed for both defective and spoiled goods, in the case of the former, for example, the entry is to take up additional cost incurred to correct the imperfection. So in the case of spoiled goods, the entry is to remove the said goods from our work in process. And any difference will be accumulated to the cost of spoiled goods and their estimated market value with the corresponding adjustment, as we have discussed. So in the case of factory overhead rate, when reprocessing cost in the case of defective goods and loss from spoilage are treated as factory overhead, so the proration automatically is upon the inclusion of their estimated figures. So meaning in the total factory overhead in the computation for the predetermined overhead rate. So this will result in a slightly higher factory overhead rate later on. So those are for accounting for our spoiled, scrap, and defective goods.